Good evening, everyone. Good evening, a big warm welcome to you from me. My name is Adam. I'm one of the traders and analysts with Trade with Precision, and I'm very excited about, well, I guess to meet you this evening. I'm going to tell you a little bit about myself in a moment. First thing I want to do is just check that the audio is good. Right now, I'm getting green lights across the board. Everything looks good, so you should be hearing me clearly and loudly. And if you want to communicate with me, the best thing to do, and at any time I want to encourage this to be as interactive as possible, is to connect with me through the questions box. Just type into the questions box, and I've got it open on the right hand side. And anytime you do have a question, I will do my best to get onto it and to respond to it immediately. So again, my name is Adam from Trade with Precision, and tonight's topic is boredom in the markets, Bitcoin markets analysis. I'm not really sure that that there's any shortage of boredom in the markets at the moment. So let's sort of kick off and see how we do. There is a risk disclaimer. I need to give you a moment to digest that, and while you are doing that, I will tell you a little bit about myself. I am based in the City of London. I'm a trend-based trader, or also known as a momentum trader. I'm a technical trader, right? Which is to say that although I do pay attention to what the big fundamentals are that are going on, all of my trading decisions are generally made using technical signals and using support and resistance, price action, all the different little elements that we're going to talk about this evening. As I said, I'm based in the City of London. I trade my own capital. That's actually where I make my living from. I trade for a living, and it's not a solicitation at all, but I do trade for clients as well, and that's not a solicitation. That's just giving you some background. And what else? Trend-based trader. I trade multiple time frames, so I'm basically a half-day trader, half-swing trader. I would say that my I probably these days have been doing more day trading than anything else. There's been some really good moves in the markets, and it seems ridiculous to not be able to take advantage of those. So on the agenda today, first of all, we're going to have a look at the price action of Bitcoin, Ethereum, any other favorite projects. Anything else you want me to have a look at, please don't be shy. Feel free to put it in. Then we'll talk about the possible potential price movements for the upcoming months. I think that's a really good idea. I think we really want to come up with a most likely, least likely scenario, in terms of probabilities, a plan A, a plan B, and a plan C. And then we need to talk a little bit about the economic factors that could affect the crypto markets. All right, so everybody seems settled in. Okay, what I'm going to do now is let's go across to the platform and let's have a look at the markets. Also, what I'd like to do just quickly, I want to check something. Just give me a moment. I'm just going to freeze my screen. I just want to have a look at something quickly. Yep, there we go. Okay, so here we are on the platform, and I've just set it up using a bit of a light color. You've got dark mode and light mode, so I'm going with light mode, and this is just a relatively simple layout. So what I'm using is candlesticks, and I'm using both. Obviously here in terms of moving averages, I've added in a 50 in red, a blue 20 moving average, and a black 10 simple moving average. These should be simple moving averages. And at the bottom of my screen, I've simply added in default settings MACD. I've taken away the histogram. You'll see that I'm trying to keep it very, very clean and simple. So I've taken away the histogram. I've got RSI, relative strength index here as well. And I really use these two indicators. They are, the way that I like to describe it is, if I'm driving my car and I look through my windscreen, obviously, that's what I need to be paying attention to when I'm driving in traffic. I need to be paying attention to the other vehicles on the road, stop signs, traffic lights, the lanes, any cyclists or pedestrians, traffic circles, and so on. When I look down at my dashboard of my car, I've got a speedometer and a petrol gauge. Okay, so these are tools that obviously I need to use to, to get the best out of my car. But here's the thing. If I blacked out my windscreens and I simply had to depend on my speedometer and my petrol gauge, I wouldn't be able to go anywhere really quickly. I'd get into a lot of trouble. So the majority of my decisions are already based on what do I see in the chart, starting off with price action, followed up with support and resistance levels. I think we could just sort of minimize this for the time being, and and really focusing on those. These two little tools really measure the speed of the market. The way we use them in the city is they measure the speed. So if this is price over time, then I'm using this to measure speed over time, and they're very reliable. Both of the tools together are used as a double confirmation. In order to just make sure that I'm not getting any false signals, they're used to give me a double confirmation. Basically, I'm using them to help, first of all, confirm that the trend is still strong, nice and healthy. They're very good. You can use them basically for three ways. One, to confirm that a trend is still nice and healthy. If it isn't, it will alert me to exhaustion starting to creep into the trend. And thirdly, it can potentially direct me to where a new trend is beginning. So that you can't have, it's going to be one or the other. All right. And so at the moment, I'm looking at Bitcoin. Actually, no, I beg your pardon. I'm looking at the S&P 500. So what I've done is I've opened up several tabs. I've got Bitcoin against the US dollar. I've got Ethereum against the US dollar. I've got Bitcoin against the euro, Ethereum against the euro. I've got the Dow. That's the Dow Jones US 30. I've got the Tech 100 and the S&P 500. Okay. So the first thing that I want to do, the reason I'm talking about this is because I do want to talk about the correlation between the equity markets and cryptos. Now, putting urban myths and gossip and all kinds of voodoo stuff aside, cryptos really do make sense. Let's talk about the reason how they came into being. All right, so they, over the last 10 years, as part of the reason we see a rise in authoritarianism around the world is there's a bit of a distrust has built up all around the world in governments, in them just not in being ineffective, in them perhaps trying to control us too much. And so this really resulted as well, by the way, in frustration with banks, feeling as though the banks wouldn't let us get access to our money, and just that kind of ultimately boiled over into, well, what if we developed a non-banking currency? Okay, a currency of our own that could not really be owned by the banks. So it's kind of a civilian or non-banking one. Not only that, but with all of the sort of global changes in global trade, we've actually really kind of become more of one planet than we ever have before. And so doing so many online transactions, ordering stuff off Amazon from all over the world, or eBay off the world, or just in general, ordering things from all over the world, it kind of seems to make sense that we also might do with having either an online currency or just a single kind of currency. That sort of seems to be where we could be evolving as a civilization if we eventually become one planet. There are effectively, look, I'm oversimplifying it, but you could say that there might be sort of two political, generally speaking, kind of two political divides. There's a divide between sort of two political trains of thought. One tends to be autocratic, which has certain symptoms. Wealthy people, a lot of wealthy people, very much in control, a huge pay gap, wealth gap between those, and quite a bit of corruption is also there. And then you've also got something that leans towards more, I'm going to call it socialism, but basically what it is meant to be democracy. Democracy, essentially, the idea is that everybody has equal opportunities. That's it. The wealthy have the same opportunities as the poor have the same opportunities. And then it gets very complicated from there, because if it was really simple, then we wouldn't have all these problems. But the point is where we're sitting is that we essentially, you sit in a camp where either you, but this ties into Bitcoin. Okay, so we sit in a camp where either you are, you believe, that democracy is really important, and we should be able to be transparent and certain things. You become, kind of, as opposed to becoming conspiracy theory riddled with all kinds of crazy ideas. But the reality is we do have these kind of trends at the moment, which we didn't have before. We fought 2 world wars trying to keep fascism under control. Fascism is essentially, and I'm going to come back to this. This is not a political rant. I'm trying to explain why cryptos are an important part of where we are today. And the fact is, everything I'm saying here, as silly as it might sound, it's all very real. So the fact is that we have, there's a huge correlation between corruption, where you get a lot of people who have a lot of money, who want a lot of power so that they can keep their money, and they tend towards authoritarianism, which tends to be fascism. Okay, so that's really the one side, and that's really the battle. We can see it in Russia right now. We can see this battle, and a lot of it has to do with misinformation, propaganda. You can see that there's a correlation again between misinformation and propaganda and fascism. That you can't have one without the other. And we had it before with Hitler and the Nazis. Anyway, so to bring it back to cryptocurrencies, is we need, there has become this desire for why can't we just have something that cannot really be controlled by the governments, cannot really be touched by it, and we can do it? Now, philosophically and logically and rationally, that makes complete sense. It's an alternative. It doesn't have to replace fiat money, which is the traditional cash that we have at the moment. It doesn't have to replace that, but it is certainly an alternative for people who wish to trade that way. So I guess it's the difference between, if you go back 1,000 years, whether you're trading with gold coins, silver coins, or doing a trade with a cow or a chicken or a goose or eggs, or doing some kind of a trade. We're just, we've just decided to open up those options. So here's the thing. First of all, it's the banking sectors, the legitimate, the big institutions. This is a big market. Cryptocurrencies is sitting around. I mean, it's a lot right now. It's growing and growing and growing. And my whole little diatribe that I just gave you was really to say that they're very appealing to big institutions, to hedge funds, to banks, to bigger companies who really want a part of that market, because really that's how they are. No matter what the market is, no matter whether it's biotech companies or pharmaceuticals or whether it's electric cars, if it's a growing industry and there's money in it, big institutions want to be able to engage in it. And the fact of the matter is that cryptos are unlikely to ever go away. They have become an idea. The idea is not controlled by governments or banks. And I think as long as that feeling, that sentiment is out there, and the beauty of it is it's international. At the touch of a button, Bitcoin is global, which means that although that sentiment exists in different countries, we've all at least picked, for example, Bitcoin and Ethereum. And so we sit with this desire to have this alternative. But here's the thing, it's also appealing to big institutions. So where we stand today, if we look at these markets, is I want you to understand that if anyone has a lot of money who's able to buy this, it's going to be the billionaires on the planet who want to invest in it. And they'll invest in real estate, they'll invest in stocks, they'll invest in everything. And they have started to engage and invest. They are some of the biggest owners of cryptos, not for control, the purposes of control. Let's not go down the rabbit hole, not for that, but for the purposes of getting rich. I'm pretty sure they like power, but no more so than owning Microsoft stocks or Tesla stocks. It's the same. And it doesn't really start that way. First of all, there will be hedge funds or institutions that go, you know what, we should get into this. And they start offering it to their clients. And their clients are like, okay, I'll get into it. And then you start hearing all these stories, word of mouth, billionaires overnight, millionaires overnight, and everyone's making money. Everybody wants a piece of that. And so really what we've got here is we've simply got something that everybody's excited about. It's in some ways, it's not that much different from Tesla stock or something else that everybody else is very excited about. Okay, but what I'm trying to make clear here is that cryptos serve a purpose. Cryptos are an alternative, non-banking controlled currency, but the banks want part of that market. They want part of it. And so what we're going to get is digital, let's call them banking currencies. Okay, they are going to offer their own digital currencies. They want to compete with it. And so what you're really going to get at the end of the day is everybody who likes cryptos is going to be split into, again, one of two parties or one of two ways of thinking. They will want non-regulated or non-bank government-owned currencies. They might want to have some of it. Some of they, own it, some cash. It's kind of like owning gold and silver. And then some people will want the regulated versions, the government regulated versions. That's why it doesn't matter. Let's do it, maybe a bold kind of controversial statement, but if China, for example, just bans cryptos, people want an alternative to something the government cannot ban, cannot cancel. And so they have that purpose. So if you're looking at it as I am, and this is not financial advice, it's just kind of where I'm really sitting at. If you're looking at it from the perspective of being an investor, I would have a bit of that in the same way that I have a bit of gold or a bit of kind of certain stocks that have potential. I can see the use for them. I get it. It's simply a digital commodity. This is the best way to think about a cryptocurrency. It's a digital commodity. Okay, and how do we arrive at that thinking? Well, gold really has value. I mean, we use it in technology today. But it's been used largely as jewelry when you go back thousands of years. It wasn't really part of technology. It had limited use because it's quite a soft metal. It's been used largely for jewelry and for wealth, for the purposes of that, because it isn't used in anything else per se. So gold has value because we've assigned it value. Everybody around the planet thinks it's nice and shiny. We've all given it value. So then we shifted to paper, and paper is tied to the value of gold. And so there's a really interesting story about how banking kicked off in Venice, and how the bankers started to realize they could make more money by shifting to paper. So instead of holding, let's just say $100 of gold in their vault, they could lend out to 10 people as though each person was getting a slice of the $100 of gold. And so basically they could multiply it, and that's leveraging the money. And so that's where they've made a lot of money. Now the problem is we've got to a point where we're not necessarily connected to gold and we're printing money. The reason I'm telling this story is that gold inherently only has value because we give it value. It only has value because we give it value, and cryptos have the same thing. It's a tool we use. We use gold. It's a tool, and it's valuable from that perspective. And so the same goes for cryptos. So the point is that gold is also, if you have a piece of gold nugget in your hand and you lose it, it's gone. It's gone, and you've lost that value. If, on the other hand, and when you decide to sell it, you could hold on to it for your whole life. When you decide to sell it, you'll only get what it's selling for per ounce on the open market. And so in that respect, cryptos are the same. If you have cryptos on your digital wallet and you lose that, it's gone. You can't do anything about it. It's not backed up anyway per se. You can't do that. And again, when you decide to sell it at the market, you'll get what it's worth for at the time. So we need to just think about it as a digital commodity that has value because we give it that, and why it's here, what its purpose is, and why we'll get central bank digital currencies, CBDCs. Okay, they will be a regulated choice for us, but institutions, nothing is stopping the big institutions from buying into Ethereum and cryptos. They're getting a part of that as well on their portfolios. So the only issue we're really going to run into is which cryptos will be here in 50 years time or 20 years time, because it could be a Betamax VHS scenario where suddenly Ethereum is worth more than Bitcoin. And so this is really something. Well, we might find that there might be some cryptos that just come and go. We've got Dogecoin, and there's so many other ones that have sprung up overnight. But it's like saying, well, I've got a currency. You need to have a little bit more value. And in that respect, there is something that Ethereum has that's really nice. Ethereum has a little bit more application and a little bit more use, in the same way that gold and silver have more use for us, or copper in the real world. So it certainly has more application, but Bitcoin is effectively the granddaddy of it all. Okay, so there are other cryptos out there. So that explains how we arrive at it, and the fact that they are going to be here, because we need this as a solution as we become a global planet. Digital currencies actually make sense, and they only have value if we give them value. And again, currencies can go up and down, and they can be impacted by people buying and selling them. So gold, again, if there was a gold rush on buying gold, it would go up, the value goes up. So the next thing we need to do is we need to have a look at what is the current state of it. So it's very important to understand that the biggest owners of cryptos right now are funds that have started to incorporate cryptos into their offerings to their clients. And remember, these people have billions lying around, so they can scoop up big orders and they can add to it. So what I really want to also highlight here is this is the very first Bitcoin bubble that we ever had. And this is when you first heard about people becoming billionaires sort of overnight. That was the very first bubble we had. And look how small it is compared to what we had recently. So we had a big ramp up here. And again, when this happens, I would say to you that this is a really good indication of institutions having bought into the concept. So institutions are now starting to get involved in the game. And of course, they're also really good at kind of, when it gets overvalued, they start to be able to take profit. So they're used to kind of thinking long term. They know that there's this ebb and flow, and so they'll take advantage of those. And this is something we have to be aware of. And I don't want to, this is not about conspiracy theories. I don't want to introduce the idea that the markets are manipulated and everybody else knows what's going on. It's not the case. I can point you out to I can point out to you a lot of big institutions that have got a lot of very incompetent people working for them. And big institutions can bleed money and make huge mistakes. This is all the case. They make money on one side and lose on the other. So it isn't really the case that there's some Illuminati controlling everything, and that's ridiculous, and I don't even want to get into that. This is really no different than anything else that potentially has become a fad. But what I also want to drive home tonight is that because a lot of institutions are investing in cryptos and across the board and seeing it as technology as well, there is a high correlation, ladies and gents, between the main equity markets, okay, the big main equity markets, and the cryptos, and especially more so now. There's a lot of correlation between, if we're looking at a monthly chart here, we can see that cryptos have started to take a hit. And we look across at the tech industry, for example, we can see that there's a very, very strong correlation between this. We had a really nice boom during this period over here. If we go back to Bitcoin or to Ethereum, we've had a really, really nice boom up here. There's a very, very strong correlation, almost to the day. For example, let's go and have a look at this. Let's switch this up, go to the daily, let's go to Bitcoin, go down to the daily, and let's have a look at how the prices have behaved in general. So we've got Ethereum over here as well. Let's have a look and compare that to tech stocks today. Okay, they're largely doing the same thing. They're very much doing, well, for me at least, the purposes are, they are highly correlated. And I would say correlated, I would say potentially around 90 to 95% correlated, but let's say 90% correlated. And I'm just trying to simplify as to why that is. I have friends in institutions, and I know that they're diversifying. A lot of people have run out of, the people who are doing incredibly well, wealthy-wise or money-wise, have run out of places to put their money. So they start looking for other things, and they've been overflowing into cryptos for a while. It's really clever. I mean, if you're a big institution and your clients are saying, look, I've got more money, but I can't buy anymore. I don't want to buy more Apple. I don't want to buy more Microsoft. The guys scramble around and say, you know what, we need to sell them something, and they come up with cryptos. And that is a big part of the reason that there is this strong correlation between cryptos and the equity markets. Once we accept that, once you accept that fact, the behavior, this is really important. Once you accept that currently there is a correlation between them because of the bigger institutions having diversified their portfolios. Once you get to that place, then the movements with cryptos will start to make sense to you. I have a nephew, and I have lots of people who are devouring hours of YouTube videos where people go into these like insane conversations about what's happening with cryptos and why they should do what they do. Some people saying why they're the future, other people saying why it's being tanked, all these different things. And it's way too complicated. It's too many stories. It's not necessarily the case. You will see with your own eyes when equities bounce back, you will see cryptos bounce back as well. You will. Now, there's something interesting to keep in mind. Sorry, I just want to move this away. Something interesting to keep in mind is that at some point in the future, and this could be in 2 years' time, 4 years' time, 10 years' time, what I'm going to be looking for to see is the next time we have a bit of a down period in the equity markets, do we have it in cryptos as well? Because it's possible that cryptos could become a little bit of an alternative or reserve currency. If we really keep going in this direction, this is early days. We're really only in the first 4 or 5 years of, although cryptos have been around for a long time, it's really only reached mass consciousness in the last 3 or 4 or 5 years. It's really still fresh. It's like being in the first 3 or 4 years of using gold as a currency. It's early days. So we need to keep that in mind. We need to keep that in mind. And so there could be a point where we start to divert, that we find equities sort of uncouple and we start to see that cryptos become maybe a reserve for something else. Maybe that's what happens. And that's important because the day that happens is going to be a very interesting one. Like right now, what's going on in the world? It's unusual, ladies and gentlemen, because for the past 4 or 5 or 6 years, we have not really seen a huge amount of correlation between the fundamentals, what's going on in the world, and what the markets are doing. But lately, with Russia invading Ukraine and it putting pressure on gas supplies and oil supplies and sunflower oil and food supplies, wheat and bread, and causing inflation, where there's a definite correlation between what we're seeing in the markets and what we're seeing happen. So there's another reason. There's another reason why cryptos are potentially heading lower. It's because people are selling cryptos they have because they need the money. This happens. Institutions will do it as well. So part of what we need to do as part of tonight, and again, I'm open to any questions you have, please feel free to ask away, is we need to look at what's happening with the equity markets very quickly, just to get a sense of where they are, so that we can understand what will happen with cryptos. So I know to you it might not seem important, but it really, well, maybe it does, but this is important. I want to go through and have a look at all three of the major US indices to get a sense of what's going on. So it's also important because I want you to understand that if we look at, say, for example, the Dow, we look at the Dow on a monthly time frame. So this goes back, this goes back all the way. This is Obama becoming, this is the 2007, 2009 global financial crisis. I'm just going to quickly draw here. So this is a weekly, I beg your pardon, a monthly chart. And this is the 2007 to 2009 global financial crisis, started to come out of it. And this is under Obama as president. And this is his final year. So this is the point at which Trump is now announced president. This is called the fourth year, or this was his fourth year of his second round. So this was his 8th year. And so during a presidential kind of election year, the markets can go a bit sideways. They don't really know what's happening. And we can see that, once Trump was announced as president, the market sort of took off for a bit. And then we get potential discussions of trade war, something else that happened over here. Then there was an assassination. He assassinated one of the guys, and then this was COVID. So there's a lot of, this is essentially Trump's kind of legacy, this period here, where the market went up, but also came down. So it was, you could argue it was kind of more range bound than anything else. Then Biden comes in and the market resumes the uptrend. So you've got this trend under Obama and sort of trend this way. And we're having a bit of a correction here. So let's talk about this because this is going to help explain what cryptos are likely to do. So the next thing I want you to be aware of is the angle. So this is what the stock market used to look like. Not just the size of the candlesticks, not just the size of the candlesticks, compared to what the kind of size of the candlesticks are now. They're huge. They're really big over here as well, really big. But the angle, look at the angle of it here, gets a little bit steeper over here, gets a little bit steeper over here, and it's got even steeper over here. So this is what we refer to as a parabolic curve. This means that the market is accelerating, it's picking up speed, and this is sustainable. At a certain angle, the market is very sustainable. Once it starts to go up a little bit steep, it often forms a bit of a bubble, and when we have a correction, we come back down to that original trajectory. This is what happens. We come back down to the original trajectory more. So if it has a steep move up, it can have a sharp correction. This is something that is pretty standard that can happen. And I want you to just be aware that this is pretty much the case there. Usually in those situations, we'll come back to these previous levels. Okay, so we've got some nice levels over here. We've got a previous one over here. You can see the market touched it. These are the major levels that we can really focus on. There's even a little bit of a level over here. These are all resistance levels versus support levels. And we can see price potentially now coming back down to this level. So just to get some kind of perspective on this, and the monthly, by the way, is amazing for giving us perspective. The monthly will just give you a sense of like, okay, how big is this? Because the media will make it out, and the best thing you can do for yourself in all aspects, I think most people know this now, is kind of block off social media, block off media stuff. Otherwise it gets in your head, or not take it seriously, take it with a pinch of salt. I'm going to bring out the Fibonacci retracement tools. So again, let's have a look at this. I'm going to use Fibonacci retracement, and I'm going to measure from this is the most recent low up to the most recent high up here. And you will see if we have a look at this, and I'm going to change the colors to something a bit more recognizable, and I'm going to thicken up that line a bit. Do that. So you'll see that if we measure this, there's actually a little bit of a higher low here. So the market goes there and there's a bit of a higher low here. So let's just play with that. So there's this higher low here. Here you can see the market is coming back to the previous low here towards 50 Fib 618. So if you're not familiar with Fibonacci, don't stress. And again, by the way, I mean no offense to anyone. I mean no offense if you're already very familiar with everything I'm talking about now. I don't mean anything to that. I'm just trying to cater because sometimes in webinars such as these, you get a mixture of folks. You get very experienced folks, and you get people that are completely new to it. So we've got a 382 and a 50 and a 618. Coming back to the 618 doesn't even come back to these old highs, and that's, you have a breakout and a retest. That's something the market can do. It's really not necessarily that overextended. Back down to the 618, it seems bad, and actually it's had a really, really strong move. It's had almost 2 years, give or take, 24 candles, somewhere around that, before we had a correction, and the market can't keep going up forever. You'll see here we go, sort of 8, 9 candles, pullback, 5 or 6 candles, pullback, 9, pullback. you know, 4 or 5 candles pullback. We've had a run of like 24 candles at a steep angle. So the correction is going to be, it's like yin and yang, that the extension and the correction is going to reflect the previous move. So I'm not really surprised about this. This is pretty much in line for me. It's even acceptable as far as I'm concerned. To come back down here, you'll see we also tend to touch the 50 moving average once in a blue moon. We come back, we tap it. Here we didn't really tap it. We almost did, and then we went past it. And here we could be coming back to connect with it, which could come back to these old highs. Might not even be a 786. Okay. In terms of that. So my point is that all of this so far in isolation, if we weren't looking at the news, if we weren't overthinking it, this would actually kind of make sense. We would be like, it's putting back into that area, it looks fine, could come back to these old highs, and it, you know, 20 years from now we'll look back and that will simply just be a correction. A couple of other things, so I want to go ahead and just adjust this. Let's bring this back down to this low here so we can measure from the high to this one as well. We haven't even really connected with the 382, and the 382 brings you back into these old highs here as well. So if we measure from the most extreme, most recent low that we've had to the old highs, this pullback is coming back to the first one, to the 382. It's actually a relatively shallow pullback, back into these old highs, back into the 50 moving average. And so we could find, so now what I'll do is bin that. Even here, we went kind of 1, 2, 3, 4, 5. Within 5 months, we went from the 2-3 month drop back up to the old highs. We let off a lot of that pressure. And so again, we could have the same thing. We could have it finally let off some pressure that it hasn't had for a while, let off pressure, and then within 4 or 5 months, by the end of the year, this is a very reasonable possibility. By the end of the year, we find ourselves back up at those highs, and next year we go on. So the good news when we have a correction like this is it lets off steam. The market is, you know, we've got inflation, you know, cost of housing is separated from income. It's ridiculous all around the world. So basically we need a bit of a correction. The angle needs to just kind of needs to correct a little bit. And by coming back down here, it's letting off, it's kind of dropping a bit of, it's overvalued. This is something. So there's a great book by Jack Lynch called One Up on Wall Street. I think he wrote the book in the late 90s, early 2000s, possibly in the early 2000s, and it's phenomenal. And in it, he talks about a quote that Warren Buffett says, where Warren Buffett says, there are only two things that, well, there are two things that really drive a stock price. Okay, so the first thing is the actual value of the company, the profits and losses, how much money it's making, you know, how much debt today, so on and so forth, assets and liabilities. And actually, if you look at the company, it can be doing incredibly well. But if nobody knows about it, if they make T-shirts or something boring and the public aren't interested in the stock, they don't buy it. So the stock price doesn't necessarily reflect the value of the company. This is how Buffett has made all his money. And again, you look at Tesla, until January 2020, Tesla was right down here. Nobody cared about it. We knew about the brand, nobody cared about it. And in just 2 years, it's become, you know, he's become the wealthiest guy in the world, and the car's become the Tesla's become, you know, the biggest car company in the world, stock price wise. Okay, so the point is that that was really the public's perception of the value of the brand. Those are the two things that move the price. And what we're seeing now really is a lot of other value. The market has been up very aggressive. It's coming back down. You know, a standard kind of move in a 382 or 50 Fib or 618 can still occur within a strong trend, and the angle's relatively steep. So all I'm really saying here is that this is overdue. We need this, and the silver lining is that at some point, once this calms down, we can expect this to recover relatively quickly, and hopefully within 6 to 8 months. We're looking back and this is nothing. We've kind of just come back out of it. Yes, the war in Russia, all these things are a factor. We need to be aware of those. So the next thing I want to show you when we look at this is, if you look here, for example, the MACD, principally speaking, we have fresh eyes on both the MACD and the RSI, which is a good sign. It means that overall the trend is healthy. It is overextended, but it is relatively healthy. When we go down to the lower time frames, you'll see that it's different. So very quickly, looking at tech, we have a similar thing. We've had, you know, the angle actually is really the thing that's scary to me over here. We've gone very steady eddy, steady, and then suddenly, whoosh, excuse the sound effects, we've kind of really gone quite extreme. And actually, if you just carry that line on, we need to have a bit of a correction that comes down. So if I was to draw that over this and just try and draw a line that sort of goes through it, we're kind of somewhere coming back down into this area. So for me, these levels are really going to be what I'm going to be looking for. If this is how it's ultimately going to play out, that could even go as far as this. I mean, that's a possibility. But if it is more likely this area, we're going to see price bottom out in the next month or two. And then maybe in the third month, we'll see a big green sign. So the clue that we're bottoming out is when we get a nice green candle like this, that is usually an indication that buyers have returned, and then we'll head up. We've let off a lot of steam, and again, in terms of Fibonacci retracements, we're kind of coming back into that 50 Fib level. So look, nothing is impossible, but this is the most likely scenario. We've really, if you look at the US economy, for example, they're doing incredibly well in many respects, and companies are reporting their best profits they've had in years. And so this is at this point in time, because cause and effect, if it gets really bad, companies might have to lay off people and so on and so forth. But right now, as it stands, everything is relatively healthy other than inflation and the war and a few other things that we're experiencing. And so we're letting off, it seems to me, this is not the same as 2007, 2009 global financial crisis. Doesn't seem the same way. Not everyone's carrying debt. Most people are employed and so on and so forth. This seems to me as though this just simply, people are just not buying anymore. Things have just become too expensive and people are bailing. A bit more of a correction, which means that when prices calm down, people will slowly start to get back into it. So it's kind of putting a bit of water on the fire. It's trying to cool it down. And so that could, when you think about it, if that is what it ultimately, and you only know down the line, look back and it gets confirmed. But if that is what it turns out to be, we'll all agree that that was probably good. It's like, okay, good, I'm glad we did that. And so we can see that this is a bit of a correction. If we look at finish off of the S&P, and we're going to have a look at that on a monthly basis, again, it's really going to be down to eyeing these key levels. And I think 3,500 is a nice round number. 50 Fib, the 50 moving average can come up here, and this is a level of resistance that could become support. So this is the potential for it to come back, and it's back in line with that kind of angle that we have there. And that could very well be the case. So all of those appear to be, that's really where the target is. If we then move across and we have a look at Bitcoin by comparison, and we go back up to the monthly to get a sense of what's going on with that, then you can kind of see, okay, well, all right, we've got a level here. So I think we want to be putting in a couple of levels here. I do want to mark that. So again, I'm going to put this in, I'm going to thicken it up a bit so we can see that. I'm also going to put another one down here. So again, I'll put this in at the top where we broke up. This is where we had the last breakout. And then I'm going to mark a couple of these as well, just so that we can kind of highlight, there's another level there, and we're going to mark that one over there. So these are kind of the main areas that I really want to focus on. In fact, you could even argue, just have a look here. No, let's go with that for now. Let's go with that. So these are sort of the areas we have. Now, one thing I can say is that Bitcoin, at least for now, is in a range. The market can only exist in one of two states. It's either ranging, which means it's mixing up its highs and lows, which is what's happening here and here. So we're within a range at this point. And it's only out of that range when it clearly, and usually, by the way, closes with a big, strong candle outside of that range. Now, we have breached the range, but we haven't closed outside of it. So if the market ends up closing back in here, or next month we get an immediate reversal back into that range, then we are definitely range bound. That's a good thing, because it means that we're likely to see cryptos go back up to their highs. But it doesn't mean we're necessarily going to go on from there. It just means we're still in a range. So you can either be in a range, or you can be trending up or trending down. We are currently, and this is crucial, we are currently at this time within a range. We're still there. We're still within the range right now, even though we've started to breach it, because if we close back up there for the end of the month, we're still within the range. We're only really out of the range when we get a closed monthly candle outside of that range. And if we produce a strong bullish green candle in this area, we're likely to go back up to the top of the range. That is our current analysis for Bitcoin. If during the month, because it's obviously now, we're not even halfway through May, we could see this come down, keep going down to here. If equity markets, which is the indices, the indexes, they could still continue to head lower. So if we see that's going to be the case, we are going to see, then we're going to see Bitcoin come back down to here. It's a possibility. It's going to be under pressure to do that. So that will then, obviously, then it's no longer within a range. I'm saying if this range holds, if we stay largely in this area, then that is where I would expect it to be. Otherwise, if we start to breach this, that's going to be the case. Now, it's interesting because I was talking about the S&P and saying, look, these markets look like they still have some potential. They could turn around where they are now, but they also do, there is some potential. There's still some room for them to move lower within that monthly picture. So if you want to know what their bigger perspective is, you want to be having a look at the monthly, because it's going to be the same here. So if indeed they continue down, all cryptos will be under pressure, and we'll likely see it move to the next level. So I need to be aware of that. I just wanted to highlight the current position, that current kind of range that we're in. If we then have a look at Ethereum by comparison, okay, so let's go to this one and have a look at this on monthly. So I'm doing this against the US dollar. Why? Well, because principally, guys, the US dollar is the biggest currency in the world, and it's still the biggest economy in the world. China is catching up, but that's where we are. So I also want to highlight that we're coming back down towards these lows here. There's not a lot of historical data here, but we are coming back down toward these lows. So these are really the levels I'm going to be watching. So do I, and so my approach would be, and again, this is not financial advice. Please, this is not me giving you financial advice. This is me musing about the way in which I do stuff. Generally speaking, if I was a property investor, I would want to buy properties when there's when property prices are crashing. I want to be cash rich and then pick things up at a discount. That's like the best thing of it. I might have to wait a year or two before they go back up. You know, in London, the property prices just skyrocketed really quickly. They recovered so quickly from, I got to in 2010 and they were at the bottom, and like by 2011, 2012, they started climbing again. So it was really, really quick. So for me, I could say to myself, listen, if I had some spare cash and I was going to do it, I'd go, okay, I can buy some here, but it's also about managing my expectations. I should say my plan is this: I can buy here because we could be at the bottom of the range and we're going to head up. However, if we head down and I bought here, that's fine, but that's got to be part of my expectation. Then I could say, look, I'm also going to put a little bit aside here and a little bit aside for these levels. So should we head down, I'll be buying at those levels, purely because in principle, I think cryptos, especially Ethereum, for example, or Bitcoin, are not going anywhere, and therefore I'm willing to put stuff in here. Now, as a general rule of thumb, for me, for example, I would never put more than 25% of my net worth into anything that I can never predict with a high degree of certainty. That's just it. So that if I lost it all, I'm like, okay, well, I'm down 1/4 of my net worth. I can definitely recover that. So for me, in this situation, it wouldn't be, that would, and I wanted to go all in, then that would be my maximum exposure. Otherwise, for me, it's gonna be somewhere around 5 to 10% of my capital that would go into this type of a situation. And I would split it between Bitcoin and Ethereum. Because honestly, we're in the infancy of cryptos that people don't get this. Although we're 10 to 15 years in, we're still in the infancy of it becoming accepted in part of the mass consciousness and global economy. That I would just be very cautious in that respect. But that would be my kind of approach to it, is having a look at those. So what's interesting to me, so that's kind of that. Now, how would I know when things are starting to turn around? Because I could wait for that as well. I could wait until there's green shoots and then start to take it from there. So one of the first things I could have a look at is a green monthly candle off one of these levels, a very strong green monthly candle at the end of the month, which means it's May now, so it'll be June, July, August, is probably like 60 to 70% probably going to be signs of the buyers coming back in. It's like oversold. And I would look at the equity markets as well. At the same time, if I saw a green candle like this, one of these forming here, that would be the market's first attempt to go back. It could be enough. That might be the last time it does that. It might go back up, but that is going to be the first sign, green shoots of buyers coming back in. The thing that has to happen is once I get a green candle, the next candle has to break the high and carry on. So if you look here, we got a green candle. We had a correction here, a green candle, but the next candle just broke the low, or at least came back down here, and the next candle broke the low. So that green shoot, what that means is that the market hadn't corrected enough, and now we're going down. So it's more likely now, not less likely, but more likely now, that a green candle that we get, a really nice strong, if we get a nice green one, even a small one, could potentially be the green shoots of the recovery. And I think it would have to happen differently. I think probably we'd have to see a bit of a different result in the war in Ukraine. It'd have to be clear, I don't know whether it's true or not, but there's strong rumors circulating that Putin is ill and he may pass away. There's that and a fear of nuclear war and all those kinds of things. But one possible outcome, and it would be lovely if this happened for everybody, is if Putin did pass away, and so the threat died kind of with him, and we had somebody else take over, which was more democratic. So Russia then started to engage with the rest of the world, again, on a more democratic basis. We would see a phenomenal recovery. The kind of optimism that would just rejuvenate, everybody would just breathe a huge sigh of relief. The market would then have a massive recovery from that. And COVID, if we saw, COVID was kind of in our rearview mirror, and we would probably have a really nice period kind of after that. So that's the sort of thing, to me, that I think would be nice to kind of see if that's going to happen. Now, look, there's not enough evidence certainty to put on that, but I'm just describing a possible scenario that can unfold. Okay, so and that's what I would need to see, by the way, in all three of these. If I see all three of them produce those strong bullish candles in these areas at a major level, as well as a Fibonacci level, if you use Fibonacci, that's an extra bit of evidence that can come in on that. That would be a phenomenal thing, and it's not likely to be this month, so it has to be something. It's going to have to be June, July, August, somewhere around there, where I would expect to see that happen. And it could be next month. It could be if we have a big, sell-off. There's a bit of panic coming in here. So again, these are tied. You might not see that as the case, but I've been obviously doing market analysis for so long now, I can see the strong correlation between these. So the reason I bring this up again is because if we go to the weekly, and this is an amazing kind of thing to be able to see. If we have a look here, really one of the things that became very noticeable when we looked at the this is the 2007-2009 global financial crisis, is we dropped below the 50 moving average. So generally speaking, we're above it, then we come below it, couldn't get back over it, then we got over it, right? Then we started going there and we had our recovery. Here we dipped below it, we're back over it, here we fell below it, we got back up above it, and here we're below it. Look at how price kind of was trying to stay above it, and now it just couldn't, and here it accelerated. So the way it goes is that the market accelerates when it gets to that point, we have a bigger fall. We are now in the panic stages, not here. This is I'm trying to revive it, okay, here, boom, we break the low, we're done. That's where we see that acceleration. So the good news should be that we're in this stage now. Okay, that's what it's supposed to be, that we're now kind of doing that. That we're in this stage and we can start to eventually slow down, start to recover, and start to climb back up. And again, that's actually quite interesting. There's a couple of these stages where it actually tried for several periods, and then you got another green, and then it kind of took off. So those are really clues. And while we're doing this, we should be seeing a similar behavior on each of these markets. If we do that and we look across at Bitcoin and we go to that weekly period, so switch this up to the weekly one, we will see similar behaviors as well. We'll start to see, here you can see it's under that 50, it hits the 50, starts to head lower. We'll start to see it starting to climb. And will there be a time when we can say with a high degree of confidence that it is definitely now on its way back up to the old highs? And the first thing we do, ladies and gentlemen, is we just target the old highs. In other words, I will feel more confident if I know that this is just at least going back to the old highs. How will I do that? Well, one of the ways is when it gets back up above the 50, that's a clue, but other little clues will be when it starts to breach these highs, for example, these highs here. Now, what I'm actually really hoping it'll do is that if we do, for example, drop lower, so let's say it does this and comes down here, and then kind of it's here, and then it starts to climb, then I'm going to be looking for it to breach these lows. I needed to go from a series of lower highs and lower lows to a series of higher lows and higher highs on the weekly, not the daily. The weekly, because if it happens on the weekly, it's probably then gonna roll over to the monthly, which means we're probably at that shift to the upside. And so that's what I'm looking for before I start to really commit. And actually at that point, it should start to be above the 50 moving average as well. Call that additional confirmation if that's going to be the case. Now, if all goes well, we will, and I will still be doing analysis at that time in these webinars. And so I'll be like, okay, this is it. This is the moment. I'm in. I think it's done. The bottom is done. We are not at the bottom yet. I think this level could hold. And if it doesn't, we're coming down to these levels. And each one of these should be seen as an investment opportunity, as a buying. For me, they are buying opportunities because everybody's going, oh, if only I had gotten a Bitcoin here. Well, you could still get that chance. And it seems like a bad idea because we're stuck on the daily. We're looking on the daily. We're not seeing the big picture. You need to see the big picture. The big picture is we've had a massive boom up here. The market can often come back and test these before it turns around and goes back up. We're still within a range. So this is not over. The story is not over. In the same way that this is absolutely not over. Look at this. If it comes back all the way down to here, which is almost twice as far as it has, then it's back. It's just given back the last year, like pretty much the time since Biden came in as president. That's all. Not 10 years, not 5 years worth of stuff. Given back just like the last 18 months worth of stuff. So let's put a bit of perspective on it. And when it turns around and recovers, within 5 or 6 months of that, it's going to be almost potentially back up at the old highs or well on its way to it. So we need to take a monthly and a weekly perspective on this. We are not going, or we are unlikely to see a turnaround. The earliest we will see a turnaround here is within 6 weeks, because we would need the end of this month. The next month would have to be a nice green sign, and then we would have to, the next one would follow through. And that would be definitely our confirmation that's bottomed out. So that's about 6 to 8 weeks that we'd have to see that. Alternatively, and if it's going to be a little bit longer, and you know, we often have this, we often have a really nice bull run in December, sort of around December through till February, which is kind of, that can often happen. So we could see that happen. We could go down all the way through a bit of winter, and then as like a bit of a stock winter or equity markets winter. And then as we head to around October in the Northern Hemisphere, as we start to go into actual winter, we could start to see the Christmas rally where we start to see it start to pick up from there. And again, it isn't just that. It isn't just that. It's so that people start spending. At that point, they start investing the money into the markets more. We start to see those things turn around. So it's very important that I'm just emphasizing here. This is what I want to see from these. Where it gets interesting to me then is if we have a look at, say, Bitcoin against the euro and Ethereum against euro. So why would I engage in these? Okay, so why would I engage in these? To me, Bitcoin against the dollar, Ethereum against the dollar, the Dow and the tech and the NASDAQ are very much correlated. They're very tightly correlated. That I would be very careful, just cautious and considerate about making decisions about those. When it comes to Bitcoin against the euro and Ethereum against the euro, this could be a slightly different game. Meaning, if you start to get a weaker euro, or we get a few other things, you would get a different results potentially on these, and then that might provide me with some trading opportunities. So I'm just keeping an eye on the time. We've got 7 minutes left. Here's my thinking. First of all, I need to distinguish, ladies and gentlemen, between investing and trading. Investing is buying and holding these, and I need the market to go up. So for me right now, unless I'm very patient, I'm like, listen, Adam, I don't mind buying now, and then if it goes down for the next 6 months, I'm fine, as long as in a year or two it's back up. That's not the best investment approach, but it's one way to go to put your money into something, but you need the expectation. You've got to have a plan. You've got to say, look, I understand this could turn where it is now because it's in a range, or it could go a bit further, and I would need a plan around that. But as a trader, ladies and gentlemen, as a trader, I am looking to take advantage of the moves now. And I'm not thinking 3 months or 6 months from now. I'm not thinking that. I'm thinking this week. This week, that was a really nice flat level breakout. Or last week, that was a nice flat level breakout. That's what I'm looking for. Or as a day trader, what's going on? So go down to the 4 hour. Bit of a problem now. Heavy sell-off once it broke through this level. Let's go and break through this level. Give you this talk. Heavy sell-off broke through this level. We've headed down. Notice how not so many green candles here. Not so many here, but now 1, 2, 3, 1, 2, 3, 1, 1, 1, 2, 3. All the green candles are coming out. This move is largely dying out now. It's headed down heavily, and now buyers are coming back in and pushing up. We're starting to get bullish divergence on the RSI. We don't have it yet on the MACD, but this is running out of steam to head lower for now. It might still come down to a double bottom and then potentially turn around, and that time we see the MACD going up, and then we see a strong correction from that side. So this is definitely slowing down. It's either going to consolidate soon in the near future and then ultimately consolidate, or it's going to reverse its direction soon. And I don't see that yet. So as a trader, you have to wait for the market to do that. But as a trader, I'm looking for those opportunities to head lower. So again, I could go to this and have a look at the 30 minutes. And so what am I doing? I'm selling. So right now, okay, this is in a bit of an uptrend, but generally speaking, I'm going to be looking to sell. So here, for example, I might be looking for reasons to break this level, and I'm looking for short trades, 3 to 1, 3 to 1, 3 to 1, meaning I risk 1%. I'm looking for a 3 to 1 kind of move. And so it's really important to distinguish the difference between trading and investing from that perspective. As a trader, ladies and gentlemen, I'm trading with the moves as they're happening now. I'm selling Bitcoin. I'm selling Ethereum right now because they're bearish, not buying it. As an investor, I'm maybe waiting to buy. I think for myself as an investor, there's no way. If I already own them, I would not be selling. I wouldn't be panicking. They should recover their value in anywhere from 6 months to 2 years time. And I mean, and that's thinking big term, but in the long run, I expect that to be the case. But in the shorter run, I'm looking for very small short trades. Now, some people are trading the 15 minutes, some are trading the 5 minutes or the 1 minute. And the trend for the time being is more bearish than bullish. So I'm looking for those types of moves. And it's really important, again, to distinguish the difference. As a trader, I'm looking for single moves, short to the downside, just for today, just for the next few hours, just for this week. When it trends to the upside, I'll be buying to the upside just for the day, just for the few hours. That's day trading. That's day trading or potentially swing trading. But it's much more shorter term and it has a fixed cutoff point. You either make money or you don't. You've got to separate the thinking from, if I'm getting in now, am I doing it as an investment or as a trade? Because if you're doing it as an investment, then you might want to be buying the further down it goes. But again, as I said, I could be looking for price to turn around, go into an uptrend on the weekly, and then I'm buying. And then I'm buying and holding because then I've got a confirmed change of trend and like this. And now it's starting to go up. Like the second it broke that high there, the second we had that, we had a double bottom. We had price come down, all these bullish candles, then a bullish start, and then it broke. And that was our confirmed new uptrend. So I could do that. I could wait for something similar here. And then as soon as it goes, I buy as an investor. Those are different approaches. As a trader right now, I'm going, it's down, I need to be selling. And so it's really like, it's so crucial to have that difference. So just to recap, because we've got 3 minutes left to recap where we are, the markets are still bearish, their monthly charts are still correcting. If the markets continue to be tied to the cryptos, tied to the equity markets and indices, there's very, there's still room to potentially head a little bit low. They've breached the most recent levels, which means they're probably going to head down to the next levels. Again, let's have a look at the S&P. This is kind of free floating. This can turn where it is. We could have it do that. Otherwise, it's going to head down towards these levels. So I'm preparing myself, ladies and gentlemen, for the very fair possibility of a move lower, but within the bigger picture, within this year versus last year, and you know how quickly time goes, it can still turn around relatively quickly within the next 6 to 8 weeks and then start to work its way back up, over the next few months. So I don't want to be panicking. I want to understand what the situation is. And cryptos could very likely go through that similar scenario. So this is something that I'll be looking to discuss in future webinars. Whether it's every week or every 2 or 3 weeks, I'm going to be coming back to these charts and having a look at where they are and when they're starting to slow down. But until then, I'm cautiously bearish. Until I see a confirmed shift to the upside, I'm bearish because that's the current situation. So for day trading, I'm looking for sells more than anything else. There we go. So let's go back to the slide deck. And let's wrap this up. So I was going to say to you, look, ladies and gents, I hope that you kind of found that instructive and useful. It's been very quiet tonight. Usually it's more chatty. And really what I was trying to do there was really get an assessment, technically at least, what I need to see in the markets as a trader versus as an investor, why I would be looking for shorts and sells at the moment. It's not doom and gloom. I don't see this as doom and gloom. I see this as just winter, summer. This is just seasons in the market. We've had a really big booming market for the last for the last few years, and this is the first really big correction we've had. But if you've been in the markets for 10, 20, 30 years, this correction is very normal. It's just that we haven't had one for a while. We used to have it every 6 to 12 months. We've had like 20 something months without it. And so it seems very scary. Okay, in the past it was COVID, before that it was a dot-com bubble. There's always something that causes that, and inflation is a factor. So as soon as we know that things have calmed down and maybe the war kind of dissipates, hopefully, touch wood, and optimism returns, we'll see the weekly starting to trend a little bit higher. So there we go, ladies and gents. I'm going to end the webinar now. I want to say thank you very much for joining me this evening. I do hope you found it instructive and useful, and I do look forward to seeing you in future webinars. So thank you very, very much, and I look forward to seeing you in those. All right, thank you.